Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move in Europe today. I'm Caroline Hepker with Tom McKenzie, and we're joined by Bloomberg reporter Chloe Millay. Good morning, Chloe. Good morning. So it's Friday. Let's think about who's under pressure then today. Delivery Hero. They are rallying, though. Why?
So they are under pressure from several big shareholders to potentially consider a sell of the business, or at least parts of the business. So this is coming at a time of growing consolidation within that food delivery industry, and it seems that investors in Delivery Hero are quite keen for the company to get in on that. The shares of that company have been on a big downward trajectory over the last few months. It's down nearly 90% from a peak in 2021. So this explains the frustration from shareholders that feel like the company isn't really making progress in streamlining its operations and trying to boost that performance. So Delivery Hero did try to sell its Taiwan unit to Uber, but that wasn't successful. So now investors are calling for a broader, perhaps more ambitious strategic review of the entire portfolio. There's companies like Uber, Meituan in China, or Grab in Singapore that could be potentially interested. So all of this M&A activity around Delivery Hero is definitely something that we need to watch out for in the next few months.
And an upgrade, Chloe, for Easyjet. Mm-hmm. Market reaction?
Yeah, well, it was well received by the market. So it was upgraded at Bernstein. The analyst said that Easyjet was a really cheap play for investors to benefit from the supply constraints in the airline industry, essentially because those constraints boost pricing. So that's a tailwind. And then the analyst also said that some of the headwinds faced by the company, including rising expenses and reduced cash flow, are mostly priced in. They also said that Easyjet is currently trading at a very steep discount to Ryanair. So essentially time to kind of get in on it. It's not all rosy for EasyJet. Analysts have flagged that 2026 will be perhaps quite tough on that budget airline after it reported earnings earlier this week. Summer is going to be very key because winter looks quite weak at the moment, but there's also very little visibility on summer so far. There's also ongoing air traffic control disruption, and then also the hit from having to halt flights in the Middle East due to conflict. So definitely a few challenges ahead for that company in the next year.
Okay, that's interesting on EasyJet. What about Whitbread today?
Yeah, so that's the owner of Premier Inn, of course. It was double downgraded at Bernstein as well. And that is because of the budget. So analysts have said that the government's adjustment of business rates, the business rate system, is creating a material hit to profitability for Whitbread. So the UK government announced that that retail, hospitality, leisure businesses with property values below £500,000 will enjoy permanently lower business rates, but that is funded by higher rates on larger properties. And the analysts have done a little analysis on this, and they found that a sample of 67 Premier Inn hotels across England, most of those actually exceed that 500k relief level. And so they estimate an impact on profit of up to £30 million in 2026-2027, and then 90 million in 2027-2028. So that essentially puts that company's efficiency plan at risk for the next few years and creates a really big hit to profit.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.